And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani here. Now, we've heard about this retail investment frenzy recently in stocks and even in ETFs. We've been tracking Robinhood and what they've been doing here. Now it's time to hear from one of their competitors, I think it's fair to say. Dan Egan is the Betterment Director of Behavioral Finance. He'll tell us what Betterment investors have been doing and try to explain the psychology behind all this sudden investor frenzy. And we've also joined by John Davi. He's the head of Astoria Portfolio Advisors, a regular here on ETF Edge. He'll tell us why value might be outperforming in the second half of the year and the ETFs he's using to do that. Dan, let me start with you. We heard a lot about the Robinhood crowd and the surge in interest in retail trading recently. Those metrics were fairly easy to see because Robinhood posts them. Tell us what Betterment investors have been doing the last 3 or 4 months. Have they also been trading a little bit more? What were they trading if they were?
It's an interesting time to sort of be able to see this going live. I don't think I've ever seen a market quite like this one in terms of what's driving each person's specific actions and what's happening. So just, to set it back, this started, say, back in March. In March and April, we were definitely seeing people getting a little bit more conservative, especially around having cash positions or emergency funds and wanting those to be available at shorter notice. We actually saw greater activity around our cash savings accounts at that point in time. Since then, as things have stabilized and people have ended up staying home a lot more, I think there's been a depression of how much people would spend. No going out to restaurants, not a lot of activities, indoor activities they used to do. And people are either voluntarily or involuntarily saving a lot of that money, and they need something to do it. And, I've definitely hit the end of everything that I can watch in my Netflix queue. We're starting to see what I would call entertainment investing, where there's no professional sports going on. There's not a lot that you can talk about that's sort of like a communal thing for us to all focus on and understand what's been happening. But the stock market is in the news. People talk about it. It's more accessible than it's ever been. So we are definitely seeing people treating it a little bit like a form of entertainment, where they want to come in and be able to talk about what they have and haven't invested in, how it's been doing. So I think across the board, both from a sort of budget point of view, but also from a what else are you going to do with your time point of view, it's been a good time to be somebody who helps clients manage their money.
John, I love this phrase from Dan, entertainment investing. We always have Dan on to talk about behavioral psychology, but that's a new line, entertainment investing. I think that makes a lot of sense. From your point of view as a professional investment advisor, what do you make of this recent retail frenzy? Or are we making too much of it? Is it just limited to really just a few bankrupt companies and a few airlines? What's your take on all this?
I do think that it is limited to like a specific cohort of stocks. So either stocks that have very low price. I think a lot of retail investors that kind of come into the market, not really for a long-term strategic allocation, tend to buy very low price stocks, penny stocks. It is concerning. I think investing, you should have a very long time horizon, as I've said on your show many times, Bob. So I am worried about it. I do think that as the economy opens up, sports opens up, a lot of these investors that would typically trade, for a quick day trade, I think they will go and find other ways to kind of utilize their efforts and their time and their money. Yeah.
John, I want to go back to this. I love this line, entertainment investing. You shared some stats with us for Betterment up through March. More customers making deposits than withdrawals. Call and email volumes 50% higher average in March compared to January. Do we have any updated stats at all? Do we have anything what's going on in April and May and parts of June? I presume you're seeing the same elevated levels.
Yeah, I think they continue to be slightly elevated. Nothing that sort of makes us anxious. We definitely, like every advisor, think that when there are kind of scary events in the news, especially around tax time, that's the point in the year where most people are thinking about these things anyway, that's sort of when we need to step up and be able to talk to our customers more, communicate exactly what's going on with them. I think that things have been elevated throughout this, both because people are trying to wrap their heads around what is the right thing for them to do financially. We had a whole bunch of legislation passed that was meant to help with people's finances, specifically in regards to COVID, withdrawals from retirement accounts, and understanding exactly what the consequences of those were. So I think that for a while, we are going to be on a slightly higher plateau of thinking about, worrying about, looking at your investments and kind of being aware of it, not necessarily only from the entertainment investing point of view, but also from the like, am I making the right moves for me and my family based upon the opportunities that are out there right now?